If you want to lower your lifetime tax bill, you're in the right place. Welcome to Rooney & Associates TNT Tax Strategies, where we believe in paying Uncle Sam what you owe, but never leaving a tip. Partial Roth conversions offer a strategic and flexible approach to converting small amounts of your tax-deferred IRA assets into tax-free Roth dollars over the course of several years. By converting a portion of your IRA account, you fill up your current tax bracket, locking in your current tax rate, rather than converting the entire IRA and having a large portion of the conversion taxed at unfavorably high rates. Partial Roth conversions allow you to pay taxes now to avoid paying potentially higher taxes later in retirement, often triggered by large required minimum distributions. Partial Roth conversions also allow you to create a tax-free bucket of money for retirement, and Roth accounts provide certain estate planning advantages over traditional IRAs, such as tax-free withdrawals for heirs. Roth conversions are done by moving funds from your IRA to your Roth and paying taxes on the conversion. If you find yourself in a low tax bracket relative to where you think you're going to be in retirement, then you can convert enough money from your IRA to fill up the low tax brackets. In this case, let's say you have a married couple, both age 60. They have a traditional IRA with a balance of $2.5 million. They have pre-retirement income of $300,000, which puts them in the 24% federal tax bracket. They plan to retire at age 65, and they project their future RMDs will push them into the 32% tax bracket due to the size of the large IRA that they have. Here's the good news. The couple can execute a Roth conversion plan because they expect their income to drop temporarily from retirement at age 65, when they aren't working, until age 73, when they have to start taking required minimum distributions. We call this period of low income the retirement sweet spot, and it's a fantastic opportunity to fill up the 24% tax bracket with partial Roth conversions. Once RMDs begin, the couple has far less flexibility to manage their taxes. To be conservative, let's assume the couple's income will remain at $300,000 during the 8 years of the retirement sweet spot. Since the top of the 24% tax bracket ends at $394,600, this gives them enough room to convert up to $94,600 to fill up that bucket. To make sure there's a little wiggle room, let's assume they make 8 annual conversions of $90,000 from age 65 to age 73. To see the benefits, let's fast forward 8 years. Now the couple's 73. The first advantage is long-term tax savings. By paying taxes along the way for the $90,000 conversions while they were in that 24% marginal tax bracket, they paid $21,600 a year in taxes. If they had done no conversions and waited until age 73, when they were in the 32% tax bracket, the couple would have had to pay $28,800 a year on those $90,000 distributions. Over 8 years, that is $57,600 that they saved in taxes by doing these conversions. If you compare the situation of just letting the traditional IRA grow untouched to the situation of doing the partial Roth conversions, you can see that you end up with the same amount of money at age 73, assuming a 5% annual growth rate and the fact that you're paying taxes for the conversions using money outside of the IRA. In essence, you've just reallocated the money by doing the conversions. But by taking advantage of the partial Roth conversions, you've taken some of the money out of the large IRA and put it into the Roth. The result is that when you have to start taking those required minimum distributions or RMDs, those RMDs are considerably less because they're based on a lower IRA balance. Thus, you manage your taxes better by keeping your RMDs lower. The next advantage is that during the Roth conversion process, you create an entirely new tax-free bucket of money for yourself. And finally, with this newly created Roth bucket, you can pass it on to your heirs completely tax-free, saving them from unwanted taxes as well. If you want more tips on lowering your lifetime tax bill, be sure to check out our website at raawealth.com. I'm a CPA and certified financial planner. My name is Tyler Peterson.